The Institute for Fiscal Studies published a report this lunchtime suggesting that the rate hikes could mean 1.4 million people lose a fifth of their disposable income. I spoke to one of the authors, Tom Waters. He's an associate director at the IFS, and he explained the findings.
So far since March of last year, if you look at an average 2-year fixed rate mortgage, the interest rate on that has risen from about 2.6% all the way up to 6%. So that's a pretty big rise. And so if rates remain that high, it means that on average, mortgage holders are going to see their mortgage payments rise by about £280 a month. And that's a pretty significant quantity. It's equivalent to around 8% or so of their disposable income.
Right. How many people are being affected by this?
Across the country as a whole, there's about 14 million adults who are in a home with a mortgage, and many of them right now might be on a fixed term deal and so are shielded in the short run, but eventually those fixed term deals are going to come to an end. Very few people have a fixed term deal longer than 5 years. And when those fixed term deals do come to an end, they're going to be exposed to these new higher interest rates and therefore higher mortgage payments as well.
OK, so we're talking about, well, it's a sizable percentage of the population who are going to be affected.
Yeah, that's right. We're looking at something in the order of a third of the population are going to be affected by this.
Right. And in terms of the amount of disposable income they have, what is the effect of this rate rise on their ability to spend on other things?
Yeah, so when we're looking at mortgage payments going up by an average of £280 a month, that really is quite significant. And that's obviously cash that they won't be able to spend on other things. Of course, it also comes at a time when prices more generally are rising. We've seen another pretty high inflation reading today. And so those things as well put pressures on household budgets and mean that for some households, they're likely to have to cut back on their expenditure.
Is there a way that you could structure help for those who are in difficulty as a result of this in a way that wouldn't be inflationary?
I think that is a real challenge. So far, no specific support packages have been announced by the government. And there isn't much support for mortgage holders in the benefit system compared to renters. So there has been call for more support. The government could consider more targeted schemes that really target those who are on low incomes, for example. But I think any wider scheme which aims to compensate a large share of mortgage holders would have this danger of basically offsetting what the Bank of England's trying to do.
Tom Waters of the IFS.